Hey you guys, I'm Carson Rouse, back with Business Buzz, where we focus on business, entrepreneurship, and investing. Today, I'm going to be talking to you guys about the 3 best pot stocks that you guys need to buy. The cannabis industry is one of the hottest industries out there, and everybody seems to be talking about it. Lately, there's been even more talk as cannabis sales have risen to even higher levels, with more countries and states within the USA beginning to legalize it, and the general American public, actually 70%, beginning to support the legalization of marijuana. The investment into the cannabis industry is starting to become a little bit more legitimate than it used to be. There's also many medicinal purposes that weed is being able to fix and aid in, with CBD products leading the front of that. So in today's video, I'm just going to be going through the strongest marijuana companies with the best valuations and the most room to grow. First off, for me to consider a stock a weed stock, their main mission or main source of revenue at least has to come from the distribution, manufacturing, or sales of a marijuana-based product, whether that be for recreational or medicinal uses, and CBD does count. Before we get into the video, make sure you guys go down and smash. Number 1, Charlotte's Web Holdings. Charlotte's Web is actually one of the first companies that truly introduced to the American public the health benefits of CBD and truly brought it to our attention. This is a vertically integrated business, meaning that they create, distribute, and sell their own products without the aid of a third party. They do not sell actual marijuana. Instead, they sell different products with CBD oil infused into them. It does not make the user high. They have an assortment of different products such as oils, gummies, and even gels that you can use. They even sell products for dogs. They sell these products both online and through their over 11,000 different retail locations. They are the current king of the CBD market with the largest chunk of the CBD market share. For the next few years, the CBD market is expected to double annually, according to many different studies. Some would even consider this stock a penny stock, considering that it recently burrowed under $5 a share, selling at $4.80 per share. 6 months ago, this same stock was trading at nearly $12 per share. This isn't unusual though for the market, because the entire weed cannabis market has taken quite the blow lately. In the last year or two, they've really been hit hard, and this is no exception. However, I think the market as a whole, including this specific stock, is down to a fair value. In fact, more than a fair value. Their current market cap is just $500 million, actually a little under, meaning many investors have yet to even heard of this company, despite their dominance within their small industry. The company, as of yet, is not profitable with an EPS of -28 cents. The company has also been blowing through its cash since December and is down to $55 million, whereas back in December at the tail end of the year, they were at $68 million. Unfortunately, when looking at growth stocks like this one, there's really not many notable valuation measures to look at. You just got to look at the business model, a little bit of valuation, their management, stuff like that. So that's really all I can tell you. Let's move on to the next stock. Number 2, Planet 13 Holdings. This is another vertically integrated business that cares just as much about the experience of purchasing marijuana as it does about the product in itself. They were founded back in 2002, the year that I was born, and own many different brands, including Planet 13 Holdings in Nevada and many other brands like chocolate brands, coffee brands, a lot to be listed. Nevada also happens to be one of the best states in America for cannabis growth. They are expected to lead the U.S. in sales of legal cannabis. Planet 13 provides a memorable, once-in-a-lifetime experience of purchasing cannabis unlike anywhere else, and changes the game when it comes to purchasing weed or really anything. Within their large and beautifully crafted stores, they sell their own vapes, pre-rolls, edibles, and much more. They even own their own coffee brand known as PURC or Perk, I hope I'm pronouncing that right, and they plan to incorporate this brand within their own retail cannabis stores so it can create the experience even more memorable by introducing coffee to the stores. Percentage-wise, this stock didn't take nearly as bad of a hit as Charlotte's Web, however they are still down over 30% in the last 6 months. They're currently trading at $1.13 a share, so this is definitely a penny stock, and that means a lot of volatility. They did do over $60 million in revenue last year, but they have yet to produce a profit. While they do have over $12 million cash on hand, if you take into account all of their liabilities, they would still be over $500,000 in debt even after burning through all their cash. Again, this is a very speculative stock with a very innovative approach to the entire shopping experience of buying cannabis. So again, the valuation, it's hard to measure, but this is definitely a great spot for your speculative part of your portfolio. Number 3, lastly, Green Thumb Industries. Again, this is a vertically integrated company with many different brands that they both manufacture and distribute through. They also own 2 retail store chains known as Rise and Essence. They currently have over 44 retail stores nationwide and have the licenses to open up another 52. This stock has started recovering much sooner than the other cannabis stocks and currently trades at just over $9 a share. This is just 8% less than they were trading at 6 months ago, which is much better than the other stocks on this list. However, some may view that as a bad thing, as they might not be getting quite the value that they're getting from the other stocks. In their recent earnings report, they reported that in the last quarter they did over $100 million in revenue, which is around a 267% increase year to date. And keep in mind, this revenue was in only 12 states. When they start really expanding, their revenues could reach really high numbers. While not profitable quite yet, they're etching pretty close at just -2 cents earnings per share. They're getting there. They're going to be profitable soon, I think. Their CEO also recently came out and announced that they are very well positioned for the rise in demand, and they have many licenses that companies are dying to get their hands on but just can't. Thank you guys so much for watching this video. I hope you end up investing in one of these companies. Remember to invest at your own risk. Go down, hit that like button again, subscribe to our channel, and I'll see you next time.